Good morning, good afternoon, and good evening to all of you, depending on where you're watching us from. And welcome to the Ion Influencers Fireside Chats, where we speak to the sharpest minds from the world of capital markets. I'm your host, Giovanni Amodeo, and today with us, we have Udayan Goyal, who is co-founder and managing partner at Apis Partners. And the topic of today's is embedded finance trends. So thank you for being with us, Udayan.
Thank you, Giovanni. Thank you for having me.
So great. So maybe let's start first with your background and then Apis as well.
Thank you very much. Yeah, so Giovanni, my background actually, I started in investment banking in the mid-90s, and as I got towards the end of the mid-90s, I joined a Wall Street bank called DLJ into financial services. But what was very interesting and what was going on at the time was that we had the beginning of what today we call financial technology. So financial technology as a concept and as a sector actually didn't exist up to that point. So very early on in 1999 and 2000, as the internet boom was happening, at the same time, technology came to financial services in a way that it hadn't come before. And so I ended up working on lots of interesting things like taking Visa and MasterCard public, working on very large transactions, including a lot of companies that have ended up in ion trading over the years in the capital markets space. So it's been a very interesting ride. And so I ran global financial technology at Deutsche Bank till 2009, and then left and started my first GP called Anthemis Group, which is really one of the first early stage investors in fintech, today very large in Europe and also in the United States. And then in 2014, I got back together with my co-founder, Matteo Stefanel, who I'd worked with at DLJ and Credit Suisse and Deutsche Bank, and set up Apis Partners. And here we do much later stage investing at the intersection of financial services and technology. And that's where we are today. We're on our third fund, and we continue to invest. And we're pretty global in our approach. So we invest across Europe, South Asia, Southeast Asia, and Africa as well.
Perfect. So you saw the three different spectrums. So the point of view of a banker that advises companies that want to do deals in the sector, early stage and late stage. What did your experience give you that makes you unique right now? And what mistakes are you not making based on your experience that you had?
So I actually think the most unique thing that the experience set has given me has been this opportunity to really develop what we call an ecosystem. So everything that we operate in is very highly dependent on the connectivity that exists between different market participants and the different people who play in each of these market participants. So having banked, as you said, Giovanni, right at the beginning, having banked a lot of the companies today that are household names, it's all the same people who tend to be at the top of these organizations or in these organizations that have moved around. And that creates this ecosystem, which really allows you to have an insight into where trend lines are going into the future, because these are the people who are ultimately dictating where we're taking the industry and where the industry is going. And that has gives you a very unique perspective from an investment perspective, because what you're trying to do as an investor is trying to see where the puck is going to end up, not where the puck is today. And by having that insight and that access to the ecosystem, you're able to really understand what is going to be interesting to these larger companies in 3, 4, 5 years. And so you invest into those trend lines, and therefore when you're trying to exit those investments, those are the companies that are becoming attractive as acquisition targets for the larger companies. So before we ever make an investment, for example, we pick up the phone to all the people we know in the industry. So if we're doing something in payments, we'll pick up the phone to all the big payment players, so the MasterCards, the WorldPays, all these companies, and say, look, we're about to do investment in an embedded finance payments company in this particular subsector, hospitality. What do you think about this? Would you be interested in buying it? And so that ecosystem to me is the biggest, obviously, opportunity strength that was created through these sorts of experience sets that we've had.
How do you define connectivity, and how does this connectivity evolve over the years? Is it like a balance, is it an equilibrium or not?
Yeah, it is an equilibrium. Firstly, connectivity is a little bit like a web, right? You need to look at it from a multifaceted approach. So you have connectivity So if you think about it, you have connectivity on the supplier side. So these are the people who are actually supplying services to the industry. You have connectivity to the consumer side. Being in largely B2B businesses, the consumer side are the large customers. So to give you a very tangible example, while I was at Deutsche Bank, a colleague of mine is a gentleman called Dan Marovitz. And Dan today is running the financial services vertical at Booking.com, which is the largest online travel agency in the world. And therefore is a big customer of many of the services that we invest in, or indeed many of the services that financial technology players are providing to the market. For example, again, embedded payments is a great example, but there are embedded insurance is another great example. So that's one side of the connectivity. And then there's a network connectivity that exists amongst the intermediaries in the market, because they're the ones who also understand who else is looking for product, services, and ultimately the opportunity to acquire these companies. So that's the third level. And then there's a fourth level of connectivity, which is talent. And talent connectivity is very interesting because as we invest in companies, one of the things we often try to do is bring in the top quality talent to run companies. So one example is we invested in a company, which a very successful company now called Coda Payments. Coda Payments today is one of the largest companies in the digital content payment space I argue in the world, certainly in Asia. And we invested in that a number of years ago. We did a pretty significant partial exit of that to Insight Partners, Smash, and GIC, which is the Sovereign Wealth Fund of Singapore. By that point, it was a multi-billion-dollar company. When we invested, it was under $100 million. And then we brought in a CEO, Shane Hapak, who's a very, very well-known CEO in the payment space, probably one of the best-known people in the payment space, who's run pretty much every major company to scale that company to the next level. So that talent connectivity also is important. So as I said, it's very multifaceted. You need to look at it across all those areas, and indeed it's an equilibrium because you need to equally apply the opportunities that come out of each of these networks to actually bring these companies up to success.
You talked about embedded finance, which is going to be the topic of today's discussion. Is embedded finance a sector, an ecosystem, or will it become an asset class, do you think, in the future?
I think in a way, all of the three, all three of the things you say, right? So let's go back and quickly think about defining embedded finance, right? So today, we often think about financial services as a sector. Actually, I would argue that financial services is a meta sector. What do I mean by that? In any given economy, financial services is 25 to 35% of any economy. Today, financial services is growing ballpark 10% a year globally, but the vast majority of that 10% a year growth globally is coming from embedded finance. And what is embedded finance? Embedded finance is we started with a financial service. So let me give you sort of a trajectory. Let's talk about mortgages, right? So you go out, you buy a house, you pick up the phone to a bank, and you say, I'd like a mortgage to buy my house. So that's a very discrete financial product that we know. At a second level, what started to happen in many parts of the world is when you went to your property broker and you were buying the house, the property broker would say, hey, would you like a mortgage? I have these relationships. So this started to become what we call contextual financial services. So they're giving you the product in the context of the underlying product that you're buying. Underlying product is property. Mortgage is actually the contextual financial service that they're putting with it. There's the third level, which has happened in many markets, which what happened was the broker started to staple the mortgage to the house. So at that point, you go to the house and they say, oh, this house is available, and I can give you a stapled 75% loan to value mortgage at this from this bank. So pre-approved, all done. Now we're starting to see the beginning of what we call embedded finance, because you're embedding the financial product into the underlying product, which is your property product. Now we're moving into stage 4. In this particular example, we're moving into these subscription products around real estate. So you can now go to certain markets and say, I would like to subscribe for this piece of real estate. And you'll ask me, well, what's the difference between subscription and rent? The difference is it's a hybrid product. So let's say you spend $1,000 on your subscription for a particular property. Part of that money is going in to build equity in that property. Part of that money is the financing portion of it. And part of it is a return on investment, kind of like a rental return for the person who's actually selling it to you. Blackstone and other large companies, for example, in the United States, are doing a lot of this type of product, this embedded financial rental hybrid product. And at the end of this, the period, then you own a portion of the equity, and you can either do a balloon payment to buy the rest of the equity, or you can continue to push it out. And that is a real fully embedded financial services product, because there are multiple providers who are providing it below. I'll give you one more example, because there's a sort of very new example that's coming into the market that I think you'd appreciate. Many of us purchase cars, right? So we have a car. It's a large ticket purchase, $20,000, $30,000, $40,000, and you have a car. Then for many years, a lot of people would lease the car, right? So you can lease the car. So you have a leasing. That's sort of a contextual product. Your car company you walk into a showroom, and the showroom would say, would you like to buy the car? Would you like to lease the car? We have a lease available. These are the lease providers. Today, many of the car manufacturers have moved to mobility as a service, which is a subscription product. It's a real subscription product. So the one great example is Jaguar Land Rover has a service called Pivotal, and you can Google it. And in Pivotal, you can pick up any car within the Jaguar Land Rover stable. So let's use an example. You can pick up a Range Rover, and you will pay a monthly subscription for that car. And that monthly subscription includes everything. It includes the insurance, it includes the financing of the car, the breakdown, the maintenance, everything apart from putting the fuel into the car. And then every 6 months, they give you a brand new car. And there's no minimum period of subscription. And then there are underlying companies that are providing the insurance to that car, the balance sheet to that car, the breakdown. These are the companies that are part of that. Coming back to your point, the ecosystem around the embedded finance. This is the embedded finance ecosystem. And I think what's exciting about this embedded finance ecosystem is, so if you put it into context, the world's top 30 banks today are worth $3.5 trillion. The embedded finance market in 10 years' time is going to be worth $7 trillion. So we're literally doubling the size of the financial services market. And that comes back to my point earlier, which is global financial services is growing about 10% a year, to be exact, 9.8% a year. And the vast majority of that growth is going to come out of the growth of this ecosystem, which is embedded finance, which, as you mentioned, is going to become almost its own asset class within financial services.
And all these steps that you've mentioned to get to a subscription business, but do you think that at some point that lots of people will want to be eating this cake? There will be too many fees and too many intermediaries, and at some point there will be a bad actor. And how do you clean that? And how do you know that the companies you invest in don't have bad actors in their ecosystem?
That's a very good question. There are a few aspects to this, right? So in order for, this is a very interconnected ecosystem. So if I go back to my Jaguar Land Rover Pivotal example, right? You have the manufacturer that sits kind of in the center of this, and the manufacturer is also what we call the orchestrator. So there's an orchestration layer, but in Italy, for example, there's a similar company called Flea, and Flea is actually the orchestrator, which actually even orchestrates the manufacturer. So it becomes manufacturer agnostic. So they can take a Fiat or they can take a Renault, and they can put all these components together and create the mobility as a service. In this particular instance, the role of the orchestrator is being taken by the manufacturer. But if you think about the role of the orchestrator, one of the roles of the orchestrator is to make sure that the sanctity and the quality of each of the inputs that are coming in to create the subscription product is sound. And within that, there are multiple aspects that they need to consider. So if you are a balance sheet provider, they need to consider your ability to actually fund. If you're an insurance provider, they need to be doing due diligence on the insurance, because actually insurance in this area is quite complicated, because it's on-demand insurance that relies on telematics and a lot of data crunching. And actually, one of the biggest roles of the orchestrator is to become a data exchange, because what they're doing is they're pulling in the customer data, so the customer profile, customer data, in this case, the telematics data, all of that data, and they're distributing it to the underlying providers of all those services. the underlying providers of all those services are then actually crunching the data and creating, for example, the pricing on the insurance, pricing on the risk and all of that, putting it all back. The orchestrator then puts that all together and then combines that, and that's what it's charging the consumer. So it's quite a complicated role that they play in between. And one of the areas is that they need to diligence each of those underlying providers. And as you diligence each of the underlying providers, you're making sure that none of those can act as a weak part of the chain, right? Because if there's now, one of the ways to get around that, of course, is to create redundancy. So what you're doing is you're creating redundancy. So for example, in the case of, I think, Jaguar Land Rover, they have two insurance providers. They have a company called Flock and they have a company called Risk. And so they've created some redundancy in case there's an issue with one or the other. And so you're starting to build these ecosystems with redundancy. You're starting to build these ecosystems by doing diligence on each of the underlying players. You're starting to build these ecosystems by building in, and this is probably the singular most important part of it, by building in robust KYC AML processes, because as you touch anything that touches money in any ecosystem, you must have very robust KYC AML processes to avoid any accusation from your regulator, because at the end of the day, anything that touches money is regulated, that you're doing something that isn't correct from that perspective, or, for example, creating layering for laundering money or many of these other areas. And so that's why there's a lot of work that needs to go in as you build each of these ecosystems.
As you collect all this data, this is a gold mine because you know a lot about the different parts in the ecosystem, as you said. Do you think that you might lose the contact with the ultimate customer because you don't get direct feedback? You rely on the data that you get, but you don't get qualitative feedback.
So there are two levels of this. Quite an interesting thought process here. There are two levels of this, right? So if you are the B2B provider, so let's go back to my mobility example. So if you're sitting below if let's say your Risk, which is the B2B insurance provider, you will never have access to the end customer, because the end customer is giving the data into, in this case, the manufacturer orchestrator, which is Jaguar Land Rover. And Jaguar Land Rover largely aggregates that data and then provides that to you, and then you're pricing and giving it back. And actually the way that pricing is done is it's done on a fleet level basis. It's not done on an individual basis. And that's how they're actually pricing it up to JLR. And then JLR actually has a single subscription for everybody because it's a fleet level pricing, right? So you, as a B2B provider, you won't have access to the end consumer. One of the major reasons that Jaguar Land Rover and other people want to be the orchestrator and want to be at the center of this ecosystem is they want to own the customer directly. Now, if you think about legacy for those guys years ago, what would happen? You would walk into a dealership and you would buy your Range Rover, right? So you'd walk into the dealership, you'd buy a Range Rover, you then own your Range Rover, and then every 6 or 8 months you'd come back, or every year, whatever it is, you'd come back, you'd service it. You may choose to service it with your dealer, which some people do. You may choose to serve it with another dealer, or you may choose to service it with a non-franchise dealer, right? Now remember, JLR does not own the dealers. The dealers are franchisees, right? So JLR actually never knew who the customer was. The dealers knew who the customers were. And at some point, even the dealers don't know who the customers are, because the dealers may lose the customer to another dealer or to another person who's servicing. And actually, this was the single biggest issue. And this is no different from life insurance. So if you think about life insurance, the only time the life insurance people know who you are is when you apply for the policy. And then the next time they know who you are is actually when you die, because they're paying out on the policy. They don't really have any level of engagement with you in between. So the car companies, people like JLR, realized that as we move away from an ownership economy to a more experiential economy, which is what we're doing today, right? We're moving from this ownership economy where we own assets to everything as a service, right? Mobility as a service, software as a service, everything as a service, right? They need to know the customer and they need to understand the customer. And they know that by knowing and understanding the customer, they can actually broaden the services that they can give to the customer, and indeed, therefore, increase their profitability in the margin. Because actually, profitability in the hardware business, in this particular instance, the car, isn't particularly good. You have a one-off sort of margin that you make on the car, but you don't really make money on anything else going future. The real opportunity set is to move revenues from one-offs to recurring revenue streams, everything as a service, something actually your group has pioneered over the years, right? Because you move people away from actually trading systems that were sitting in-house to actually trading systems that sat on the cloud and you were charging as a service, right? So it's something that's happened in that market many, many years ago, but it's now going to happen in everything else. So that's what they realized. And so they realized that they have to therefore change their business model completely so that they actually have the direct interaction with the customer and they can collect all that data on the customer. And so today, for example, you're driving around the car, there's telematics in the car, they know where you're going, then they know which areas you're going to. So just to give you an example, they know that you go and play golf every Saturday. So now, because they know that you play golf every Saturday, they can send you an offer to say, we'd like to offer you attractive terms to play golf at this new golf club that's opened up, that's very cheap. And they make very, very big margins on these sorts of services. And so they're completely changing their paradigm in terms of how they make money, because at the end of the day, in any industry, the single biggest part of the value chain is owning the customer, right? It's actually the distribution part of it.
And how much of this process is regulated now? And do you expect more regulation to come in? And will this regulation be not favorable to the providers?
In a way, it's quite regulated. Let me explain to you why. There are really, and I'm now talking more in a European context, right? So I'm giving you the European paradigm, although to be fair, this is something that's happening in many other markets. It's happening in the United States, it's happening in Australia, it's happening. So there are 2 or 3 things that have happened in all these markets. And actually, India was one of the places that actually pioneered this stuff. The first is what we call open banking, right? Open banking, and in Europe, it's the Payment Service Directive 2. What that says is that if you're a banking provider or insurance provider, you must open up the data. So if my data that sits within a bank or insurance, I must allow other people to get access to that data through an interchange layer. And so today, PSD2 is operable. So all my transaction data that may sit somewhere else is available to somewhere else. So what that allows people to do is pull my transaction data, make some analysis, and then create products that they can offer to me around that. That's what. The second is data protection, right? So we have now data protection regulations in Europe and the US, and they're pretty similar across the world, which basically says that me as a consumer, I need to provide consent for you to get access to my data. And if I don't provide consent, you cannot get access. And I can give you consent in multiple ways. I can give you evergreen consent. I can give you limited consent. I can also say what I give you consent around. So all of these structures now exist. So that means I have good control of my data. I also have the ability to give people access to transactional data, which is incredibly important for financial services transactions. And when you start to put these things together, that's what is at the baseline of this ecosystem and the regulatory overlay that allows you to exist. And then on top of that, you are basically overlaying traditional regulation like consumer finance regulation, consumer protection regulation, all of those. So that's it. So we are in a pretty reasonably good state right now where the way all of these different laws, regulations interact, they create the right ecosystem for these sorts of products to be built and to be available to the consumer.
Perfect. A few final questions as we are approaching the end of the discussion. How do you build your fortress? So you've been operating in the space, in the embedded finance for a while. Can anyone come in and start their fund and invest in the sector?
No, I think it's a very good question. It's quite hard. I mean, look, we are all investment professionals that have been in this space for like 3 decades, close to 3 decades now. What's interesting about it is that being there right from the beginning, as I mentioned to you before, the strength is in knowing the ecosystem participants and knowing them well and knowing what their strategy is and knowing what they're coming in. By knowing their strategy, by knowing what they do, by knowing where they're going, and also by knowing all the different participants in that ecosystem, what we tend to do is we tend to map, right? So we think of these as big investment themes. For me, there are 3 big investment themes we play in. The first one was financial inclusion, democratization of finance, which is your ability to use technology to deliver financial services to a much bigger group of people. So robo-advisory technology, things that you're, I'm sure, familiar with. The second aspect of it was deepening of the digital economy. Every economy becomes more digital. So that's where these very deep digital transaction layers, the people like Coda Payments and others, where, you know, we've done 25x returns and things like that, are very interesting. And then third, obviously, in biggest emerging areas, embedded finance and the ecosystem that's being built around this. This is iterative. It, you know, takes, you know, 15, 20, 30 years to build the theses, and the iterative thesis is to build the networks around this, to really understand the networks. So I think the barriers to actually do what we do are very high. And I think we're pretty unique in the way we think about these trend lines and these thematically investing. In fact, we've written about all of these, and if you want to read more about this, go to our website, www.apis.pe, and all of these trends are in white papers, all of these themes and white papers, including embedded finance, contextual finance, democratization of finance, everything. We write it all out. We talk about it in a lot of depth. We think about where those ecosystems are, how we develop. And then what we do is we map the markets. We figure out all the companies that play these trend lines the best, and that's what we invest in. And we know who to sell them at the end, which is the other part of the ecosystem. And what we're trying to do is really work with entrepreneurs to augment their knowledge with our knowledge, to augment their ecosystems with our ecosystems, and to create something much more powerful as a partner, much more than an investor. We think of ourselves as partners as much as we think of ourselves as investors with our investee companies. And we like to be very much those partners that help these companies grow and become large unicorns like Coda or others, and then obviously to the final exit at some point, either in the public markets or to larger institutions who are buying them.
Very final question, very briefly. What does the APIS brand mean now? And what should it mean for you in 5 years' time or 10?
Well, I think today, I hope what it means to people, and I do think a lot of people view us as incredibly thoughtful and knowledgeable people who are very deep in a single sector, which is the intersection of financial services and technology, who really understand that sector and who really understand the nuances, the ecosystems, as you mentioned, you know, all these areas which are interconnected across those areas, and who therefore are able to use that knowledge and that ability to help grow companies to either a very successful public exit or a very successful private exit in the future. I think that's what I hope to date is, and what I'd like to think it would mean in the future is to become really the global leader in that space, really the unprecedented global leader in that space. You know, today we are, as I said, we are in certain geographies. We'd like to be very global. I don't really think about this industry geographically. I really think about this as a very global industry. Embedded finance is a very global industry. So whether a player comes from Indonesia or indeed from Argentina, it shouldn't matter, because this is such a global industry, because it's B2B mainly, and and the opportunity set is so global. So I really like to think about this as global. So we'd like to be thought of as the global thought leaders in this space, and indeed the most successful investors in this space over time.
Fantastic. Udayan, thank you so much for your insights, and thanks everyone for listening.
Thank you very much, and thank you for having me.